If you buy into the notion that we are transitioning to a higher volatility regime, then by definition, a few things happen. One is people's asset allocation becomes too aggressive. Why? Because you have to change the underlying assumptions about the volatility of markets. Secondly, multiples start looking high. So yes, there is a transition. Now, the good thing for investors is when these transitions happen, markets typically overshoot. Typically, there's too much contagion, too much correlation, and you get value that pays you over time. And Michelle was right earlier today saying emerging markets is happening in front of our own eyes. And the question becomes at what point you go in, because we're getting some real overshooting. I think it's still to come. Right. And the reason why it's still to come is because we're not handing off from central bank artificial growth to genuine growth.
What I think is going to be interesting to see is if they do raise, does value continue to outperform growth in general, right? Because if you look at these stocks that they picked, they are kind of, they're defensive in nature, but and they've done well over the last couple of years, right? So it'll be interesting though to see if there's a style shift, I think, more than actually picking out stocks. Because I think we could all say that utilities and staples will not do well when rates go higher, but let's just see if it kind of goes to the next level, and that's what I'm going to be watching for.